Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello and welcome back to the White Rabbit channel. Let's get straight into it. First of all, we are looking at the quarterly time frame. Here we had a few scenarios mapped out for the upcoming year, more or less. Of course, I cannot fully predict whether a scenario will play out exactly as drawn, but based on the SR level, these are the possible outcomes. The first scenario is that this quarterly candle ends up red or only slightly green, and then we see the bigger push higher during the next quarter. With only 25 days left for this candle, this scenario is becoming more likely. Of course, if we see a strong move higher from here, then this could still end up looking more like scenario 3 or 4, where price spends some more time in this area before making the next move. My preferred scenario, as it stands right now, would be the first one. The second scenario has become much less likely unless we suddenly see almost nothing but upside for the rest of this month. Price would need to move up aggressively, break through resistance, and continue higher. That can happen, of course, but it is not something I expect right now. So with that said, we most likely need to wait for this month to close and then come back to this time frame to see whether the scenarios remain the same or need to be adjusted. For now, we have seen a rise into the SR level followed by a rejection. The next step is to watch the close, which will be in about 25 days. We are still very early in the month, and this move down happened quite quickly. That means there is still plenty of time for price to make another move lower or higher before the candle closes. For that, we will take a look at the monthly statistical levels a bit later. Next chart, we have our higher time frame levels. One of the levels comes from the previous range, and that is where Bitcoin found its bottom, at least as it stands right now. We also had a cycle timing window that we used to look for a move in the opposite direction, which is exactly what we got as price pushed higher. Price then rallied into the next range, where it found resistance at the value area low, and in general, within the lower part of that range, acting as an SR level. From there, we saw a rejection and a move all the way back down to the range lows. Now price is hitting the same support area again. For me, I cannot front-run a breakdown of this level until it actually happens. As long as that has not happened, I have to treat this area as support. Only once price clearly breaks down and accepts below the level would I start looking lower. At this point, I would also be watching for potential deviation scenarios. By that, I mean price moving below the level but not really getting far away from it, then ranging for a while before reclaiming the range again. That would be a deviation scenario, and most likely an area where I would get involved again. For now, this remains support, just like it did for almost 8 weeks at the previous lows, where price accumulated before the rally higher. If this level eventually breaks, then on the higher time frame, we have a few important lows to watch. One would be below the previous 60K lows, and then another significant area lower down around 52K. But as I said, for now, my focus remains on this support level. Only if it breaks would I start looking for those lower targets. Okay, now let's talk about an older signal that we had. The first one comes from this little crown indicator tool. It measures volatility, trend, and several other indicators, then combines them into a single signal. Of course, you can adjust the settings however you like for more or fewer signals or for different time frames. I have it set up here, more or less the same way Crown uses it himself. What we can see is that it flashed signals around the bottoms of the bear markets. Or to be more precise, the conditions required for the signal were consistently met near the bear market lows. You can see it in every example. Sure, price can still range for a while after the signal, like in the first example. It can also get one final flush lower, like during the Corona crash, or even move a bit lower after the signal itself. But overall, these areas ended up being the bottom zones for Bitcoin. And when you zoom out to the bigger picture, nobody can really argue that these were not bottom areas. Of course, that assumes the signal continues to behave the way it has historically. For me, this is another confluence supporting this area. And as mentioned, it is not just one indicator triggering the signal. It is a combination of several indicators and conditions coming together. Based on the historical results, I consider it a very interesting area for long-term buying. At least that's how I use it. I am not telling anyone what to do. I am simply sharing what I am doing. So even if this eventually turns into something like a Corona-style flush lower, I would still be looking to buy lower rather than panic sell. Now let's add some other confluences that I'm watching as well. Next, we have the power of three metrics. Historically, these have done a very good job identifying bottom areas. I'll start with the lowest one. As you can see, price does not necessarily trade exactly on this line, but it has consistently acted as the last major area holding during capitulation moves. So far, it has been present at every major bottom. What I mean by that is simple. We have never had a monthly close below this metric. Yes, we have seen wicks below it, but we have never seen a confirmed monthly close below it. Currently, this line sits around 58K and is slowly rising day by day. That does not mean price has to drop to that level. Price can simply reach it through time if it spends long enough consolidating. However, based on history, this remains the lowest area I consider likely unless something fundamentally changes. The next metric is the power low. We have already watched this one closely, as price was trading almost exactly at this level. Back then it was around 52K, but over time it has risen and now sits around 58.5K. This level has also been tested at every major low. It does not always happen exactly at the bottom and sometimes takes time. The best example is the 2019 bottom and the Corona crash. During the initial bottom, we did not get a test of this level. But later, after price had already moved higher, we saw the Corona crash bring price right back into it. In the end, both lows came together and formed the ultimate bottom area. Then we have the 2022 bottom. That was probably the cleanest example because all three angles came together and price basically grinded right along them. Today, the power low sits around 58.5K and continues to rise. If price simply goes sideways from here, then this level will continue moving up as well. In a few months, it could already be sitting near current prices. So the more time price spends consolidating, the less likely it becomes that we see significantly lower prices. Of course, a liquidation move is always possible. But that brings us to another confluence, Bitcoin production cost. I won't go into too much detail because you can easily research that metric yourself, and there are plenty of videos explaining it. I've been using it for quite some time and have done the research already. For me, it is simply another piece of confluence when looking for a bottom formation. Historically, price can wick below production cost. It can even close below it and trade below it for a while, especially on the weekly time frame. However, on the monthly time frame, we usually only see wicks below it. Yes. In 2019, there were 2 monthly closes below as the bottom was forming and rounding out. But even then, those ended up being excellent long-term buying areas. Currently, price is testing that area again. So for me, this is not a bearish signal. If anything, this is where bearish trends have historically ended and where major bottoms have formed. Yes, we can still get another wick lower, but this level can also be tested later through time rather than through price. That means unless we get an actual breakdown of the range and start holding below it, I am not aiming for the lowest levels right now. If that changes, I will update my view. For now, I know those levels are there, and I know they can be touched, but only if important support levels are lost first, especially the range itself. Until then, we already have 2 major metrics coming together, the power low and the production cost. Both are sitting almost at the same levels, which creates a very nice confluence zone for me. At the same time, we have macro indicators showing bottom signals similar to what they showed at previous major lows. Yes, price can still move lower, but historically these signals have appeared within the bottom area of each major decline. Of course, there are differences this time. For example, the current drawdown was only around 52%, while previous bear markets often saw 70 to 80% declines. That is definitely something to keep in mind. Another flush lower is possible, and I cannot deny that. But on the bigger picture, If you believe Bitcoin will eventually make a new all-time high, then this still remains a very attractive spot buying area for me. Overall, we are dealing with a zone rather than an exact price. Price has already started forming a range here. We traded the first bounce from it, and now I am looking for new setups to take additional trades. And of course, buying spot within this area is something I'm continuing to do. I market out the time window where price historically formed its bottom. By the way, I also used some fractals here so we can visualize how it could look. And I'm pretty sure it will not play out exactly like this because markets always form different patterns. However, the overall process is usually quite similar. Liquidation move, range formation, and then a move higher. On the fast scenario, we already had the move down into the level E1, followed by more or less a V-shaped recovery and a push higher. The other two scenarios are fairly similar. One of them consolidates in a tighter range before making one final move lower, while the other forms a larger downward range, finds the bottom by deviating below the previous lows, and then pushes higher afterwards. These scenarios are based on history. While what we get may look similar, it will never be exactly the same. That is why we look for lower timeframe setups to potentially get involved with leverage trades. From a spot perspective, however, this remains a good area for me. Even if price wicks lower, that would not be a problem if your plan is to hold for a longer period of time. Time-wise, we are already inside the bottoming area of the cycle. That does not mean price has to go lower, but knowing the possible scenarios is still helpful. I have more confluences and signals that I'm watching. Not all of them have flashed yet, but the process is underway. With that said, this is my bigger picture view for now. I am bullish from this area. Of course, lower timeframes can still make moves up and down. But based on historical data, I have to remain bullish when these major data areas are being tested. And we are already back at the first major one, which is the production cost area. The rest is up to you. Now let's check a few other charts and see what is going on locally. The yearly fib time price chart. Here, price rejected at the fib timing window, although it front-ran the ideal level slightly. However, it still found the top within the correct timing window and played out more or less as it should have. What I mean by that is that the timing window did its job. We got the reaction and rejection around the expected time. The only thing that was off was my expectation because I was looking for price to move a bit higher first before rejecting. We still caught a short, just not at the exact level where I would have preferred to take it. So yes, we got the rejection, and price moved lower instead of pushing higher into the resistance area first. Now price is almost back at the range lows. The next timing window comes in July, and for now I want to give price some time and see whether it forms a range or not. Ideally, I would like to see a range develop here. Then, as we get closer to the timing window, we can reassess the situation. For example, will price still be here moving sideways? Will it be trading in a downward sloping channel and slowly grinding lower along the time price trend line? Or will it already be moving higher into those dates where we could see another rejection followed by a higher low? The important part is always what price is doing when it reaches the timing window. You can see that almost every time, or at least very consistently, we get some kind of reaction or reversal around these timing windows. It may not always be the exact reaction we want, but the timing tool is doing its job by producing reactions when it should. With that said, we still have lower levels that remain possible, while the upper levels are resistance for now. Timing-wise, we have July next, then around August, and then October. So for now, let's see what price does and come back to this chart when we get closer to the next yearly fib timing window. That does not mean the levels will not be respected before then. They absolutely can be. During this move down, however, price largely ignored many local levels. It was simply an impulsive move lower, and sometimes that just happens. But sooner or later, those levels become relevant again. For now, on the downside and also on any move back up, we need to keep the 65K area in mind as a potential SR level. If price rejects there, then we may need more time or another range. If we break above it, then we can start aiming for the next higher levels. Now let's move on to the next chart, the Revin indicator. Here we can see that price has moved very deep into the lowest zones. Currently, it is finding support in this area, as we can see buyers stepping in and leaving wicks behind on the candles. But that is another story. What we can see here is that the lower area, around 65K, is currently acting as resistance. If price breaks above it, then the next target would be the upper boundary of the range, which is around 71K. Of course, these levels will move slightly with each day, but for now, I do not think that is too important. As long as Bitcoin remains below 71K, the indicator stays in bearish mode. Only on a break and close above that level would we start looking for higher prices. And yes, this is a lagging tool. Similar to Elliott waves, market structure, or momentum indicators, it will not catch the exact bottom. It turns bullish once price has already moved higher. So we have to wait for those setups to confirm. Until then, the local 65K area remains resistance. The next support area is around 60.5K, which aligns nicely with the production cost level. The lowest level for today sits around 58.7K, which also aligns with the power law price area. So overall, that creates a very nice confluence zone in case we see another wick lower. You can also see a local support level right where price is currently trading, around 62,260. That is the level I'm watching for the daily close. If price closes above it, then I would start looking for a move back higher. If it closes below, then another move or wick lower remains possible. So keep that level in mind for the daily close. So what I have here now is not only the range, but I also added some Fibonacci levels to it, mainly the value area deviation levels. What I mean by that is you can take a fixed range tool and pull the fib from the value area low to the value area high. That gives you these levels. It is important not to use the candle highs and lows, but the value areas themselves. Of course, you can adjust them whenever the value area changes. This gives you the deviation fib levels that I tested a long time ago, and they help us see what is possible when price leaves the value area. We can see that the lower part is being tested now. I also have one more level for the extreme scenario, which sits around 58K. Once again, that aligns with the power law area I showed earlier. The levels we are testing now align with the production cost area, which also lines up with these fib levels. So let's see if price finally starts forming some kind of range here. On the upside, the 65K area remains the first major resistance. Another thing we were watching was the lunar cycle and the daily cycle. As you can see, price moved lower during those dates, which is perfectly fine. What we want to see is a major level being hit at, slightly before or shortly after those timing windows. From there, we look for a reaction or reversal. In this case, price simply moved straight down through all of these levels. Yes, I had some long attempts that failed as well, but that is part of the strategy. Situations like this happen. Now price is hitting the next major area, and we need to see some reaction. Ideally, we want to see a range forming that we can trade. From there, we would need a trend break to confirm the daily cycle low, potentially combined with momentum confirmation as well. If we look at daily momentum, it is currently sitting near the lows. However, the pressure remains bearish as long as price is not closing above 64.6K, which is more or less the 65K area. By the way, the 3-day time frame remains bearish as well, but it closes today. For now, the pivot sits around 73K, almost 74K. I do not think price will reach that level today, and even if it did, I would not immediately see it as bullish. Most likely, it would simply attempt another retest of this resistance area. So tomorrow, we will see where the new 3-day pivot ends up. The reason this is important is because major lows historically formed while 3-day momentum was bottoming out. That is something worth keeping in mind when looking at the bigger picture. All of this is happening right into the larger data-driven support areas. So all of this, and not just one indicator, is telling me that either the bottom is already in, or we do not have much significant downside left. Production cost is the first major area supporting that idea, along with several other metrics. Of course, it is possible that the final confirmation comes later. Now let's talk about the monthly statistical levels that we looked at a few days ago when the month opened. We mapped out the average moves and the timing windows. Since the month opened, price has basically moved straight down without even retesting the bearish wick area. Because of that, we reached the monthly average low based on historical closes within only 5 days. That means that if this month were to close as an average bearish month, it would already be trading near that level. However, there is an important detail. The timing statistics suggest that a bounce is possible, not necessarily a move to a new monthly high, although with Bitcoin, anything is possible. But if we start seeing some kind of range forming here, and the average timing window for monthly lows is reached, then I would expect a bounce back higher. Don't get me wrong, we could still spend time ranging first. But if there are no new lows and price starts moving sideways while the average timing window is being reached, then based on the statistics, I would assume the monthly bottom is likely in place. The reason is simple. The average price level has already been reached as well. Can we still go a bit lower? Yes, absolutely, especially while we remain inside this timing window. Remember when I mentioned that this month was a bit tricky because the daily cycle and lunar cycle did not align very well with the monthly timing? Well, this is the result of that. Anyway, once we get the first bounce and a range starts forming, then the next important timing window becomes next month, which aligns with the yearly Fib timing window. For now, keep in mind that we are looking for a bottom formation during the first 2 weeks of the month. For that to happen, we need a range to form. And for a range to form, we need some kind of reaction first. Locally, we can already see attempts. We have wicks forming, but there is still no real follow-through. Price could simply continue grinding around here until the timing window is reached and potentially form some sort of ending diagonal structure. That would not be ideal because it would create a sloppy downward channel, and then I would have to wait for that pattern to finish before trading it. A normal range would be much cleaner, and that only happens once we get a proper bounce. Other than that, we still have lower levels available. But as always, I go step by step. As long as this area holds, I cannot aim for lower levels. If it breaks, then we are prepared and already have levels mapped out below. Today is Friday, and price has been moving down all week. So let's see if we finally get some movement today. Keep in mind the support level, the 60K low itself, and of course the major data-driven levels I showed at the beginning. We will reassess next week and see where we stand. Locally, I am in a long from the last SFP, but for now, I am not aiming for much higher. I simply want to trade the local range. And that is basically it. I'll move over to the Patreon update and see if we have any local setups there. If you want those updates as well, you can join the Patreon. You'll get some nice extras and learn some of the things I share so you can better understand how I view the market and potentially use those concepts yourself. I'm also testing new ideas alongside the existing strategies, so I think there is a lot of useful information there. If you want to invest in knowledge, you are welcome to join. With that said, I wish you a great day, and I'll see you in the next one.